Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I want to speak about GBPUSD. Now, why do I want to speak about GBPUSD? Because at the moment, we do have quite interesting price action and structure. So what I will be doing is, as usual, providing a complete multi-time frame top-down analysis. First, we will be covering what we have from a technical perspective on it. Then we will go and see what we have when it comes to the commitment of traders, which is basically the COT data. So what the non-commercials in the market are doing, which are the biggest speculators. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that at the moment, the market here is headed towards a quite strong historical structure level. In fact, we can see how this level was acting as resistance here, again resistance here, again resistance here. The market then broke above the zone, and at this point, all this previous resistance is turned support here. And we can expect the market to go and retest this previous resistance turned support before then creating a potential rejection to the upside. So on the monthly, everything seems first short-term bearish and then long-term bullish. Going down on the weekly time frame, what we can see is that at the moment, the market has just created this rejection to the upside. Now, why was that quite expected? That was expected because we can see how during this move to the downside, the market printed this candle here, a candle with a very long wick showing rejection of these levels, which means that this previous demand and support is now again demand and support here. So a short-term rejection to the upside before the continuation to the downside was quite likely. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Going down on the daily time frame, what we can see is that in all this impulse to the downside here, there is one candle not related to the move, which is exactly this green candle here, meaning that we do have quite strong previous daily resistance turned support, previous support and resistance at this level, which is also a quite strong supply zone that, as we have already said previously on the monthly and weekly, we want to see the market reject to the downside. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse. Now, if we take it from this high here, we can see how we have just tested the 0.786 of the Fibonacci taken on this impulse to the downside, which was lining up perfectly with this previous support and resistance. And if we take our Fibonacci from the actual high, we can see how that 0.786 was also lining up with the 50% of the Fibonacci taken on this impulse, creating a cluster of resistance at this level that we do expect the market to reject to the downside. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what the non-commercials and the biggest speculators are doing, we can see how we went from having 32.1k net positions down to having 4.6k net positions, with overall shorts getting increased from 23k to 37k and longs getting decreased from 64k all the way down to 41.8k. So GBPUSD is definitely getting bearish also from an institutional perspective. So how we will be approaching this potential shorting opportunity with students back to the support and demand that we have identified at the beginning of the video on the monthly time frame. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, Those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And only if the market will shift from an intraday bullish to an intraday bearish market, only at that point we will be adding GBPUSD to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside and for the market to provide and create a lower low. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also click the link in the description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.